Greetings and welcome to Roofstock Academy. My name is Tom Schneider and I'm here with
Zach Evanish.
And today we're going to be talking about common acquisitions mistakes. Specifically, the objective is to understand the common acquisition mistakes, and Zach and I are going to talk through them a little bit. All right, so let's go ahead and just look high level and then we'll deep dive into them.
Yeah, some of the common acquisition mistakes, and I can tell you I've probably experienced 80% of these. The first one is chasing yield. Another one is not thinking big picture and really understanding and staying focused on your long-term goals. One that we've all experienced, paralysis by analysis. And then also kind of the flip side of that, impulsivity.
Yeah, I know about impulsivity for sure.
When it comes to chasing yield, it's really important to make sure you're accounting for risk. If you just look at the numbers, the properties that end up being the most attractive are the lower priced properties, generally in kind of that $60,000 to $80,000 range, because that's really where you see a strong price to rent match. But what's important to understand is there are also some risk associated with those properties. Generally, they have higher vacancy, higher turnover, and also a little bit harder to sell, so they're a little less liquid. And the reason that is the lower priced properties are generally in renter or investor neighborhoods. So if you're looking to sell, there are fewer owner-occupied home buyers.
Yeah, and in looking at the properties on Roofstock, there are, a lot of them in the spectrum, and you look at those ones that are so much cheaper, like you look at that IRR and gross yield, and it's like just jumps out at you. I love to think about, chasing yield, kind of thinking about like bonds from country. Like, do you want to buy a bond from like North Korea, or do you want to buy one from like France or Germany? Like, that's the way you need to think about risk with some of these. So
it's a really good analysis or comparison.
Chasing yield is if that's your strategy, there's a lot of people who are very successful at that, but know what you're getting into.
Exactly. Know what you're getting into and make sure your team and mainly your property manager is set up for that type of investment.
Yeah.
Yeah, and another big, common acquisition mistake is not thinking big picture. For instance, yields are not static. So I see investors who really adhere to that 1% rule, and maybe they'll see a property that's listed for $120,000 that has current rents of say $900, but the tenant's been in there for 5 or 6 years. And what they're not seeing is maybe the market rents are $1,300 or $1,400. And if they took a step back and really looked at the big picture of that property, they'd see significant rent upside and understanding that, hey, this property actually does fit my criteria, maybe just not quite yet. So really understanding the big picture of what I'm buying, I'm going to be owning this property for a long time.
Yeah, in a later lecture, we're going to have that checklist of property analysis of all those opportunistic times and kind of like provide the funnel of like what is the the big picture things that you should be thinking of. And upside in current market rent is an excellent example. There are a lot of properties that have been occupied for a long time, and there's just like a lot more opportunity.
Yeah, a lot of times if you see a property that has a lease, that's 2 or 3 years old, a lot of landlords are very conservative and don't raise rents. So if you see a tenant that's been in there for 2, 3, 4+ years, that's generally one where you're going to want to dig into deeper because there may be some upside in the rents. A big one that I talk to every day with people about is, Zach, I'm really excited about real estate investing. I've outlined my goals. I put together my plan, but how do I get started? I'm nervous to get started. And a lot of these investors are as smart as they come. They have, pages and pages of spreadsheets. But some of them will even admit they're kind of caught in analysis paralysis. And one of the ways to avoid that is just put your plan together, make sure it's a clear, thought out plan. And when you find properties that fit that investment strategy, be ready to pull the trigger.
Yeah, I think this is actually, this program, Roofstock Academy, is help for that, is helping getting over paralysis and by analysis and having that plan in place, if you're a newer investor or if you're a more experienced investor. So, have confidence in the system is like a way I like to frame it for sure.
On the flip side of that is impulsivity. And a lot of times I'll see this for people who have wanted to do real estate investing for 3, 4, 5 years and have built their spreadsheets and had felt like they were in analysis paralysis, and then they just go ahead and buy the next property because they're frustrated. So just like we don't want you to get into analysis paralysis mode, we also don't want you to act with an impulsivity, which leads to you making a bad or ill-informed investment decision, and you end up buying a property that doesn't fit your criteria.
Another layer of impulsivity is in offer negotiations. And,
Exactly right.
I think it's negotiations are very fun.
Winning is fun.
Winning is fun, but do not win to win. Have a number on what your max bid is and stick to it. Do not win to win. Yeah.
Exactly right. Yeah, be ready to win, when you're negotiating, but also think about, kind of when you go into the negotiation process, have your final number and then stick to that.
Go ahead.
So some of our key takeaways from today's Roofstock Academy are have a system, trust the process. Opportunities are out there. If you find the right opportunity, be bold and jump at it, but don't think like there is not another opportunity similar to that coming along. And how do you do that? You be data driven. That's how you know you're not acting with analysis paralysis or impulsivity.
Yeah, and never chase a deal. Keep emotions out of it. Set your number and leave it there.
Yeah, as hard it is, they say real estate investors kind of leave their emotion at the door. I still get emotionally involved in deals all the time. I think some of that can be beneficial, but let the numbers be your guide.
That's right. Awesome. All right. Happy investing.